Hi class, this video is going to focus on credit transactions and specifically how to record sales on credit, which we consider to impact accounts receivable. All of this information is located in chapter 9 of your textbook on page 135 to 146. And if you've been watching these videos, you'll know that there is a trilogy of videos on credit transactions, and this is the second one. So if you have not watched credit transactions, the introduction, that is going to be a good one to start with, because there will be some knowledge required that has been discussed in that video. What are we going to focus on today? How to record transactions that impact accounts receivable, because we're recording sales on credit. So what are our learning intentions for today? We will not touch on the second one, but you should be able to define accounts receivable. And then we should be able to record transactions in a sales journal and be able to record the total amount owing in an accounts receivable schedule. So this video is purely focusing on accounts receivable, sales on credit, and the sales journal. So if you leave this video thinking that you're going to be confident to be able to complete a sales journal and can complete an accounts receivable schedule, then it's been a successful video and you've achieved the success criteria. Before we go on, let's just have a quick reflection. What are we talking about when we're talking about a credit transaction? We're talking about a purchase or sale of goods or services on credit. That means we buy the goods and we have a little bit of time before we have to pay for those goods or services. And if this credit transaction is of us making a sale to our customers, we are talking about a sale on credit, and this impacts our sales journal. You'll also hear the words accounts receivable a lot in this video. This means that a customer owes us, the business money, because the customer obtained goods or services on credit. The customer has purchased from our business goods or services which we've provided, and they're going to pay us back at a later date. If we do make this decision to sell goods or services on credit as a business, it is crucial that credit transactions are recorded accurately. It's really important. It's vital to know who we have sold to on credit and how much they owe us, because we've taken a bit of a risk. We have given the things that we sell in our business to a customer without receiving any cash off them. There is a risk that they might not pay us back. They might not understand what they need to pay us back for and in what date. So we need to manage this really accurately. We need to know how much all these customers owe us instantly. And this is where accounting fits in. To do this, we use what we call a sales journal to record the details of any sale made on credit. So anytime you see a sale on credit, you're going to record it in the sales journal. How will you know that it's a credit transaction? Thinking back to that first video, the introduction video on credit transactions, you know if you see the source document or the word invoice, it's a credit transaction. And then you're going to be that detective to work out, is it a sale that we've made to one of our customers, or have we purchased from a supplier? But let's have a look at this sales journal. It looks relatively simple, and it is, and our job is to record everything in there. We will always record the date of the transaction, and then we'll write down the name of the accounts receivable, the customer's name that has purchased the goods. We will then record the source document number, and these will always be in sequence, because if you remember back to that first video, we have written this source document, so they will always be in order. We write a source document for an invoice and then record it in our sales journal. Next time we make a sale on credit, we record an invoice again, and that will be the next number in our sequence. So we should never miss a number. They should always be in sequence. And if you have missed one, or you're recording ones that don't look like they're in the sequence, you probably made a mistake. We are then going to write down how much dollar value the sale was, how much GST we've charged, and hence how much they owe us in total in the accounts receivable. The columns sale and GST must always equal the accounts receivable number. And we will do this for every single transaction on credit that was a sale. So you can imagine big businesses will have lots of these. Once we've done that, we're going to keep recording our accounts receivable because it's important to track how much each credit customer owes the business. Now, if we think back to that sales journal, we have all the information, but we don't really know how much each customer owes us. It's going to be really hard to work that out. We need a better way as well. So all transactions between customers and businesses that have involved a credit transaction should mean that we are keeping up an up-to-date information about all these accounts receivable. We need to know how much they owe us. And to do this, we will have what we call an accounts receivable record. We're going to have a separate document. There's no necessary way that we do this, but you'll be given templates in accounting that writes down how much they owe us and records the increases and the decreases. So in this case, we're looking at the accounts receivable record for a customer called B. Waldron. You can see that the business made 2 sales to B. Waldron, one on the 4th of June and one on the 8th of June. On the 4th of June, we made a sale to this customer using invoice 1201, and that was for $2,200 in total. $2,000 of sales, $200 of GST. This customer owes us $2,200. On the 8th of June, we made another sale, this time for $1,100. Different invoice. They don't need to be in sequence now because this is just for one customer. So now this customer owes us $3,300, and you can see we're keeping a running tally. However, on the 28th of June, this customer has made an electrical funds transfer payment, EFT in the document, for $3,300 and settled the account. So we've written not sales GST in the detail section, but cash received, $3,300, and now this customer owes us nothing. You can see the value of having this record because now we know how much this customer owes us, whether it's getting too big, whether they're taking ages to pay us back, and this is really important information, and you should always have this information easily available so you can talk to your customers. It is vital that the business owner monitors these credit accounts all the time, particularly if they are overdue based on the credit terms of their invoices. What do I mean by that? Think back to credit terms. Often we will give the time that the maximum amount of time they have until they will pay us back. If they keep breaching this rule, we're getting worried. They are overdue, and we have to implement some strategies to try and get the money back. And we'll talk about that in later times. This is important, but we also need to have another document that lists all of our customers and all the amount balances. So we have on a bit of paper how much each customer owes us and hence the total. We call this the accounts receivable schedule. It's common practice at the end of every month, a schedule of accounts receivable is prepared. If you see the word schedule, you're going to write down how much each customer owes us in one record. It lists all the accounts receivable, all their current balances, and hence we can work out how much the total amount is owed, and this input number goes into our balance sheet. A typical schedule might look something like this. As at 31st of July, we have 4 customers, W. Ayres, C. Conroy, D. Wilson, A. Gilbert, and this is how much they all owe us. If you add all them up, you would realize that this equals $10,000. So we now know our customers owe us $10,000. We have a current asset that goes in our balance sheet. We can analyze this to work out, are we worried about a certain amount of certain customer? And this is important accounting information. This is the total amount, as I mentioned, that is reported in the balance sheet. And guys, that's it on how we record accounts receivable or sales on credit. So let's reflect, have we achieved the learning intentions? Can we define accounts receivable? Are we feeling confident that we can record credit transactions in the sales journal and record total amounts in accounts receivable schedules and records? If you can, you are now ready to work on your own, to work through textbook questions and hopefully achieve the success criteria when you say that you can and have completed sales journals and recorded accounts receivable records and schedules. Well done, guys, and keep practicing your accounting.